Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny, Bert, the Dividend Diplomats. Today we're going to talk to you. I've been buying up one REIT a lot over the last few months. I'm going to share with you how many shares I have scooped up of this undervalued REIT that is down over 20% year to date.
Guys, smash that subscribe button. Give Bert the Hurt and I a nice thumbs up. We are just coming out with dividend stocks right now, hot and heavy. This one's going to be interesting though, Bert. You know why? Because not only is this dividend aristocrat down over 20%, but you've been putting your money where your mouth is, brother.
You're right. And that's what we try to do on this website. When we put out our watch list, when we put out all of these different videos talking about undervalued stocks, it's not because we're just trying to get some clicks and get some views. We are seriously consider buying all these companies that we are talking to, and you are seeing our investment decision. So I've talked about this one in particular a lot. It's been on my watch list. And as the price has continued to drop, I've continued to add. And guess what? When it drops, I continue to add even more. We're going to go through the purchases, show what I've done, and then show how large my position has grown since we started scooping up this stock over the last 3 months.
And I can't wait. This has been one popular dividend growth stock in the dividend investing community as of late. But instead of just, again, talking about it, Bert's going to show you about it because he hasn't just bought one share. He didn't just buy 5 shares of this stock, guys. He didn't buy just 10 shares, 20 shares, 30 shares, 40 shares. Bert has bought 47 shares of this dividend growth stock. Again, a dividend aristocrat. So no, it's not a penny stock. No, it's not a dollar stock. No, it's not a $5 stock. This, dropping 47 shares here into his portfolio. Nothing to scoff at. Impressive by all means, Bert. Nice job, man. Cannot wait to hear about this.
All right, so this company is the monthly dividend paying REIT. You got Realty Income. Ticker symbol. Oh, let's talk about Realty Income. So who is Realty Income? They are a real estate investment trust, which is a company that will buy properties. It can span all different kinds of properties. Some are single tenants, your pop-up shops at the end. Some are whole strip malls. Some are apartment complexes. Some are cell phone towers, data warehouses, data centers. It can be anything. Realty Income, though, is focused primarily on single tenant thing. They lend to your large companies. You have your grocery stores, your Walgreens, your CVS's. And what's unique about Realty Income, they have a very high lease rate. Their occupancy is very, very high. And because they've spread it so well over their top tenants, they are not overexposed to any one tenant. That is the beauty of what Realty Income has done over the years.
Hey guys, there's no joke about it right now. The reason why Realty Income and REITs in general are getting their asses whooped right now really just comes down to interest rates, guys. The law of economics is finally kicking in a little bit here. Very high interest rates means very expensive for certain businesses to operate and run and grow. Real estate investing, you borrow to buy and you use leverage to do that. So it becomes a little bit more costly. And usually that's a little bit inversely related to valuation. The higher the rates, the lower the price, the lower the value. So, so at the same time, they're working against that. And that's, again, it's not just a realty income problem, but it's a real estate problem. And businesses, as Bert knows, on the other hand, most industries are looking to shrink their footprint. Target might be opening a few stores here and there, but they're also closing 9 stores based on the, $billion+ amount of theft that's occurring. But businesses are trying to shrink. CVS and Walgreens, I think, announced store closures. So certain industries are shrinking as well.
And that's why the diversification is so important. You're not overexposed to any one tenant. So that's always a critical thing for you to look at when you are investing in real estate. And then on top of it, real estate investment trusts have to pay out such a high percentage of their income. They're required to keep that REIT status. I believe it's 90% of your net income, Lanny, has to be paid out to shareholders. Well, if you if your debt increases, the cost of your debt increases, I should say, your interest expense increases, and there's less income out there, REITs that typically aren't managing their cash flow well, that aren't managing their balance sheet well, that have high payout ratios, run the risk of having to pay out too much interest expense and have to reduce that payment to shareholders. So it's always something you see a lot of those very high yielding REITs right now facing immense pressure to either cut the dividend or find some other way to support the dividend. And that's why people like safe REITs like Realty Income.
And guys, Realty Income, I mean, they've been paying for hundreds and hundreds of months consecutively, nonstop, a monthly dividend. And on top of that, they've been increasing the dividend for 25 years, going back to the late 90s. And not only that, but they've also been increasing their dividend. What is it, 3 times a year, Bert?
Yeah, it's basically every quarter. So there are 3 of them that are just tiny fractions of pennies, and then there's usually one slightly larger increase in there. So it builds up quickly. The monthly dividend and the increases, the dividend snowball gets rolling very fast for Realty Income shareholders.
So again, this is not like a brand new REIT that was created 5 years ago, 6 years ago, 10 years ago, 15 years ago. This REIT has had their skin in the game, as Bert is indicating here, as we're saying that they've been through a few different economic crises, the tech bust, the housing, financial crisis,
Yeah, there
COVID,
were high interest rates in the period before the financial crisis too. This isn't the first time they've been in a high interest rate. It's just been a very long time since they've been in a high interest rate environment.
Yeah. So, so that's Realty Income, guys, the monthly dividend stock. As we said beginning and highlighted in the beginning, Bert's not just watching the REIT. Bert's not just talking about the REIT. He has opened up his wallet and is doling out a lot of capital, acquiring already 47 shares. Now, Bert, when did you start acquiring Realty Income?
Yeah.
Again.
Yeah, again, June 30th, I started the last day of Q2. So pretty much all of this has been here in quarter 3, 2023. Bought 2 shares at 59.39, and I slowly was nibbling. I thought it was undervalued in the high 50s. It kept adding 2 shares here, 3 shares there, 2 shares there, all above 57. And I kind of paused it for a little bit. I slowed down my purchases. I held out. But when I really started to add was in September when the price dipped below $55 per share. And I've basically been buying them every single week, or even lately towards the end of this, multiple times per week when that price dropped from $54.89 when I bought 5 shares on September 6th to the last purchase of 8 shares on September 26th for 200 at $50 a share. I've set a limit order at $50, and I'm like, I have to get some Realty Income at this price.
And he did, guys. So literally in a blitzed 3 months, and I say blitzed, he's acquired 47 shares, guys. Just to give you a little frame of reference here, Bert has dropped over $2,500 on REIT, on Realty Income.
And sure, the price right now is $49.62. So I'm in a net loss position here for these acquired shares, but the average cost basis is $54.61. I have been able to average down and lower that cost basis on this $2,500 investment in Realty Income to just $54.61, which is the beauty of doing the dollar cost averaging strategy. Not buying it all at once, just slowly adding to it and slowly growing that position over time.
And Bert, what is the total annual income that you have added?
$144.29 because their dividend is $3.07. Monthly, though, they pay this dividend monthly. That's why everybody freaking loves Realty Income. $12.02 of monthly dividend income right there.
Already crossed over $10 a month at $12 a month just by this ad. Now the question is how many total shares do you own now of the Big O?
So yeah, we hinted at this was not my first purchase. Before this, I owned nearly 125 shares of Realty Income. I owned 124.838 shares before these purchases came into effect. So this isn't a small position. So you take that, you add the 47, I have over 170 shares here of Realty Income. The market value on this position is over $8,500 total of Realty Income. My average cost basis for the investment is $48.61 after this last tranche of purchases. So my previous one was at a much lower cost basis. It has been a really long time since I've invested in Realty Income. I am so pumped up that I've been able to start building this position out at these prices.
You're pumped up. Now your dividend going forward amount, yeah, you're producing over $527 per year. And how much is that now per month?
It's $43.96. So it's getting close at the price, almost a share. That would be sweet to get at least one share of Realty Income every single month. Get
Where
that.
you're like you're a little landlord over there, reaping
Yeah.
profits of $44 a month. And yeah, what is the goal then? What's your goal?
Yeah, so I think you guys know how much Laney and I love getting to round numbers and round number milestones. We have $43.96 in monthly dividend income from Realty Income. The goal is $50 flat Realty Income. That is $600 of annual dividend income for Realty Income. So how close are we? Again, we have nearly 172 shares right now. That would require us to get near another 23.6 shares at the current price. So just over 23 shares. Not too far off at the current price. That's nearly $1,200 to reinvest. So not a lot to get there. Not too far of a journey here to get this up
I'm
to
calling
50.
end of October. You're there.
I mean, if the prices continue to stay down like this, possibly, yeah. I mean, these are Realty Income below $50 is always going to be a very appetizing investment
We're
opportunity.
salivating right now, guys.
Yeah, just keep feeding.
So guys, this REIT is down 22% so far this year. Again, we're filming this September 28th. Some high level metrics using the funds from operations ratio when we talk about realty income to see if this is a great REIT to buy right now. I mean, the FFO is 12, Bert. So that FFO, the priced FFO is 12 based on the $4 in funds from operation estimate. So 12 times right now is not too bad.
No, and their payout ratio, this is what I love about Realty Income. It's very manageable for a REIT. Sure, it's higher than our 60%, but their payout ratio is still under 75%. So even with the higher interest rate, even with some of the headwinds they're facing at the top line, their payout ratio, when you compare it to FFO, is still very, very solid for the REIT sector. That's what we like to see.
And again, guys, dividend aristocrat. So you already know 25 years is accomplished. They've been increasing dividends for 26 years. And the last 5 years on average is just under 4% at 3.71% on the 5-year dividend growth rate for Realty Income. What a nice REIT right now. Because what is that dividend yield now that it's down 22%?
6.2% right now for Realty Income. It is insane that it's at this mark right now. So in total, to summarize, the last quarter we've added 47 shares of Realty Income. These purchases have added nearly $150 in annual dividend income, over $12 in monthly dividend income. This has pushed our Realty Income investment to over 171 total shares with income that has surpassed $500. We get $527.54 annually from Realty Income. On a monthly basis, that's just about $44, and we are going to keep going until we hit $50 in monthly dividend income from this position.
What do you guys think? Have you guys been buying Realty Income stock? Is this a stock to buy right now that you just can't pass up while they're this beat up? Or do you see a little bit more pain in the future? Let us know in those comments below. Now, Bert, now that they're below $50, are you looking to at least grab a share now that's below that Mendoza line?
You bet so. You bet that we are. The last tranche was there. I'm going to set some purchase orders here. We'll see if maybe, just maybe, I can get a few more, another 5 shares of Realty Income while it's below that $50.
Bert's liking it right now. I've been watching it, hard. Just myself, I do own quite a few REITs in the taxable account, BNL, BRT, and a few others. Realty Income. Enough said.
Yeah.
Subscribe to this channel, guys. Like this video.
Let us know what you think of this. And remember, if you're not with us, you're against us. Jack.
That was Bert and Laney from the Dividend Diplomats, over and out.